Ever feel like investing has become way too complicated? With thousands of ETFs to choose from, how do you know which one is truly worth holding forever? I am often asked, if you could only pick one ETF to buy and hold forever, which would it be? Stick around, because I will reveal not just my top pick, but also the exact criteria I used to find it. By the end of this video, you'll know which ETF investors consider the absolute best for a buy and hold forever strategy. But more importantly, you'll understand why it beats all the others. And that's what will truly help you build lasting wealth. I'll compare 3 major ETF categories and reveal my top pick from each. In fact, in the end, I'll show you the exact math on how you could make $1.2 million from just one ETF. Let's dive in. Now, before I reveal which ETF wins the crown, I need first to tell you which types of ETFs you should absolutely avoid if you're going the one ETF route. Right from the start, you should never invest all your money into specialty or sector ETFs, the ones that focus solely on technology, healthcare, banks, or semiconductors. Why should we avoid these? Because they lack proper diversification. When you put all your eggs in one sector basket, you're taking on a massive amount of unnecessary risk. You remember what happened to tech stocks during the dot-com crash? Or energy stocks in 2014? Without diversification across multiple sectors, your entire portfolio could take a devastating hit. Stay with me, because next, I'll reveal the 3 critical criteria that your forever ETF absolutely must meet. And then I'll introduce you to the 3 ETF categories that actually made your shortlist. So, what should your criteria for the perfect buy and hold forever ETF? After years of investing and research, I've narrowed it down to 3 essential criteria. First is diversification. You want an ETF with hundreds of stocks from different sectors of the market. This spreads your risk and maximizes your chances of catching the next big winners. Second, it has a positive track record of at least 10 years. This shows that the ETF can perform well in both bull and bear markets. Third, and this one is huge but often overlooked, a low expense ratio. The lower your fees, the more money stays in your pocket, compounding over decades. These 3 criteria are non-negotiable for a true forever ETF, and only 3 categories of ETFs perfectly meet all 3 criteria. In just a moment, I'll reveal all 3 categories and break down the best ETFs in each one. And trust me, number 3 might surprise you. It's been absolutely crushing the market lately. Based on my research, there are 3 ETF categories worth considering for your one ETF portfolio: broad market ETFs, dividend ETFs, and growth ETFs. The winner of this showdown will be revealed at the end, so make sure you watch the entire video to find out who comes out on top. Let's start breaking down each category. The first category is broad market ETFs. Here are the top 3: VOO, which tracks the S&P 500, essentially the 500 largest American companies; VTI, which gives you exposure to literally every publicly traded stock in the US. We're talking over 3,500 companies; and VT, which takes diversification to the extreme by including stocks from around the world, almost 10,000 different companies. I'll be honest, I love this category. In fact, I have a substantial amount of VOO in my own brokerage account. For total return history, the data shows the S&P 500 has delivered an average annual return of 10.41% since 1957. That's the kind of consistency that has historically built wealth over time. Historical volatility data shows these funds have experienced significant market fluctuations, but the extensive diversification has helped smooth out sector-specific disruptions. According to Vanguard's own risk assessments, these funds are rated 4 out of 5 on the risk scale. Broad market ETFs have some of the lowest expense ratios in the industry, such as VOO, which is just 0.03%. But before I reveal my final pick, let's look at our next category, which I know many of you are excited about. The second category is dividend ETFs, which might be perfect if you're focused on generating passive income. The top 3 picks in this category are SCHD, a high-quality dividend ETF with companies that have strong fundamentals. DGRO, which focuses specifically on companies that grow their dividends year after year. And VIGI, which targets dividend appreciation around the world. When it comes to historical returns, dividend ETFs have generally shown performance patterns different from broad market ETFs. According to Morningstar data, while they might not always match the total return of growth-oriented funds over very long periods, they've historically provided more consistent income. This happens because dividend-paying companies distribute their profits rather than reinvesting everything back into growth. However, and this is important, ETFs like SCHD, DGRO, and VIG focus on dividend growth, which means the income they generate has historically increased over time. According to S&P Dow Jones Indices, companies in the S&P Dividend Aristocrats Index, which includes many holdings in these ETFs, have increased dividends for at least 25 consecutive years. Dividend ETFs have reasonable expense ratios, such as SCHD's expense ratio of 0.06%, but there's still one more category to cover. And this one has been absolutely on fire lately. The final category is growth ETFs, the high-octane rocket fuel of the ETF world. The top three picks here are SCHG, a large-cap growth ETF that focuses on innovative companies. QQQ, which tracks the Nasdaq 100 and is heavily weighted toward technology. And SPMO, a momentum-based ETF that has been delivering eye-popping returns lately. Historical return data shows impressive numbers. According to Morningstar, SCHG and QQQ have both delivered average annual returns exceeding 20% over certain 5-year periods. Of course, this historical performance comes with trade-offs. Volatility metrics show these ETFs have historically experienced larger price swings. They've risen dramatically during bull markets, but also declined sharply during corrections. Risk measurements from their fund providers typically place these ETFs in the higher risk categories. Growth ETFs typically offer better, though less, diversification than broad market funds. Now, after analyzing all three categories, it's time to reveal my pick for the one ETF I would buy and hold forever. If we look at which ETF most consistently appears in buy and hold forever recommendations across major financial publications and investment resources, one name stands out: VOO, Vanguard's S&P 500 ETF. Why does VOO so frequently top these lists? According to investment research, it checks all the boxes that long-term investors typically look for. It provides instant diversification across 500 of America's largest companies. It has one of the longest track records of any index, with data going back to 1957. The expense ratio is just 0.03%, among the lowest in the industry. It provides both growth potential and income, with a dividend yield of around 1.5% that has historically increased. VOO 500 companies generate revenue globally and represent about 80% of the total US market value. The S&P 500 has survived numerous challenges: the oil crisis, Black Monday, the dot-com bubble, 9/11, the 2008 financial crisis, the COVID pandemic. And through it all, the index has eventually recovered and reached new highs, while VTI was very frequently mentioned as well, with its even broader diversification. Let me show you what VOO could potentially do for your financial future. If you invested $10,000 in VOO today, and it continued delivering its historical average return of about 10% annually, after 10 years, you'd have approximately $25,937. After 20 years, that grows to $67,275. After 30 years, your initial $10,000 becomes $174,494. That's the magic of compound interest working in a single simple ETF. But what if you were adding just $500 monthly to that initial investment? After 10 years, $105,187. After 20 years, $379,684. After 30 years, nearly $300,000, $1.2 million. That's the kind of wealth that can fundamentally change your life and your family's future. All from consistently investing in just one ETF. And if you're looking for more ETF ideas for 2025, click right here for my video on the best ETFs to consider this year.